Hi everybody, welcome back to my channel. This is Oliver Wiedmaier at Ollie underscore all caps on X, founder of Voyage Trading Group. Today I'm going to discuss the core of my trading, which is finding and executing swing trades based on compression and expansion. No matter what the setup is, no matter what the pattern is, no matter what it is that we do, it all comes down to compression and expansion. Okay, and there's nuances and rules, but at its core, very simply to the point, okay, we want price to be trending. Okay, we want price to trend, we want price to consolidate, and then we want it to continue trending. And the goal of swing trading is buying on the first day of the new uptrend. Okay, that is the core of low risk entry for swing trading, when trading momentum. Okay, and so there's many ways to do this. Okay, essentially what we're doing is not talking about scans here. We're not talking about watch lists. We're just talking about the execution part. Okay, there's a ton of different ways to find stocks that are trending. Okay, it's not difficult to find and create a watch list of trending stocks. Okay, they're very easy. However, finding stocks that are consolidating is less of a mechanical system, right? It's more of your visual, right? And so what I do, just to briefly touch on this, is I make a scanner to build a watch list of stocks trending, and then I, with my eyes, look for stocks consolidating. But that doesn't help us in the execution part. The execution is the part that people have the most trouble with. Okay, and so the point of this is to help you see how I see price action, where I look to execute on the first day of a new uptrend when the price is continuing to trend, right? It's going to start trending once again. Trends, consolidates, and then continues trending. Okay, so very quickly, there is a few ways to do this. One, if you want to use EMAs, this is a great way to visually train your eyes so you can see what it looks like when price is consolidating and when price is expanding. Okay, I use 4, 9, and 21 EMA. You'll see on my charts very clearly what I'm looking for when I am doing entries based on the expansion of EMAs. Okay, what that looks like is you have 3 EMAs, right? You have a 4 EMA. Okay, typically it's going to trend higher. It starts to turn down when it's consolidating. Okay, and then it starts to take up again. When that's happening, the 9 EMA is typically doing something similar, right? But it's a little bit slower. Okay, it is slower than that 4 EMA. So our trigger is based on the 4 EMA ticking up. We want to see price. We want to see the 4 EMA start to slope down, and then it ticks back up. And on that first day that it ticks back up is the entry. That 21 EMA will be again slower, so it typically looks something like that. But this compression is what we're looking for, but we trigger when that 4 EMA ticks up. Okay, now this is a very important caveat to trading based on the 4, 9, and 21 EMA. Okay, so price will always advance before the 4 EMA ticks up. So the EMAs lag price. So what does this mean? So as price is, let's say these are candles, consolidating, and then it ticks up, right? That 4 EMA will look like this, right? So this candle is going to break out before this ticks up. So this system has a built-in confirmation, okay? So it's going to start pushing higher then the EMA ticks up. So this is actually good because what it's doing is it's going to trigger later in the day. So we are going to confirm the move. So we'll pass the opening volatility, okay, past the lull period during the day, and then near the close, when price starts to push, the EMA will then trigger that uptick. Okay, and that uptick is what's going to give us the signal to buy. Okay, and as long as these rules, ATR rules, are still valid, then the entry is still valid. Okay, and then just one last thing before we start looking at charts. We want to see price pushing past the last 3 to 10 days. 7 days seems to be the most successful trigger, is when a price is pushing past 7 day, the seventh previous day close. Okay, but 3 to 10 days is fine. 3 is fine. 10 is fine, but 7 seems to be the best when it comes to win rates. Okay, now what we're going to do is we're going to go through some chart examples. I have a watch list here. This is very simple, bare bones watch list. This is stocks that have made a 30% move in 30 days, 50% move in 3 months, and 100% move in 6 months. And we're just going to be bare bones price and moving averages on the chart. We're not going to look at any other indicators. This is as bare bone and as core to what we are trying to accomplish here as possible. And what I'll do is show you what it looks like with EMAs and without EMAs, and you'll see that there's an alignment here. So you don't have to use the EMAs, but if you want to, that's totally cool. But this is what we're going to do. And what I'm going to do is, when I want to take the price off the chart, I can actually remove price. So you can just start to see the structure of the market and understand what it is that we're doing, which is we look for a stock that's trending, a stock that's consolidating, and then continuing that momentum. But we're going to try to find entries based on the very first day of that new uptrend. So obviously, we have a stock here that fits that bill. And so it, let me switch over to, so it very, very simply has momentum. It consolidates, pulls back, and then it kicks off a continuation of that momentum. So what does it look like if we're just focusing on the moving averages? Well, here we can see that the moving averages are trending. Okay, they start to pull in, right? And you can see the orange, which is the 9 EMA, is sloping down. The 4 EMA, which is the blue, sloping down. And then it ticks up. Okay, so what does price look like on the day of the tick up? The day of the tick up, okay, is this big day here. Okay, and as long as it meets our ATR criteria, it's good for entry. 1, 2, 3, 4, 5, 6, 7 days here. So once it was, pushing 30 or so, 30 or so, it would have been good for the entry. A lot of people wonder, what's the entry criteria? What's the exact trigger? The exact trigger is when the new uptrend is starting. It's very simple. A lot of people want to know the exact reason. Why did you buy right now? Because the new uptrend has started. Okay, so let's take the moving averages off. You can see very clearly that there is exactly what we're looking for, which is momentum, a pullback, and it clears 1, 2, 3, 4, 5, 6, 7 days, 8 days, 9 days, 10 days. So it's above the consolidation. If you wanted to wait for it to be less of a pullback and more of a breakout. If you buy here, you're buying a breakout. If you're buying, around here, anywhere up here, this is kind of the pullback buy. I prefer the pullback over the breakout, but nonetheless, you get to see it with and without the moving averages. So this is why I like to incorporate both, because it's giving the full picture and the full structure. And it moves higher. Now, could you have done it on this day? Is this day valid for entry? This is a great entry here, but is this a great entry? Let's take price off and let's see what happens. Is the stock trending here? Yes, look at the blue, the orange, and the purple. They're all trending higher. And then what do we see happen? We see the 4 EMA compress against that 9 EMA, and then it expands, right? So we're having that compression right here. Let's put price on, and then move the moving averages off. Is the stock trending higher? Does it pull back? And does it start to continue that momentum? Absolutely. So you don't need the moving averages. 1, 2, 3 days, right? 3-day minimum. The minimum is for sure 3 days. You have the 2 tight closes here. This 1, 2, 3, 4 days, this counts as a momentum leg. Definitely counts as a momentum leg. Now, does this day count? Well, I don't even have to look at the moving averages to tell you, no, this is not compressing. This is not getting tight. Let's look at the moving averages. See, it does not have that compression. They're sloping up. Yes, they compress, but that 4 EMA never slopes down. That 4 EMA needs to slope down for it to be considered a pullback. Okay, Rocket Lab. Where do we see some potential buys? This is fantastic buy right here. Let's take price off. What do we see? We see the moving averages are trending higher. They pull back, they tighten up, and then that ticks up. Now, you want to ask yourself, how come this wasn't a buy here? Let's look at the price. Would that have triggered a buy? And it would have definitely triggered a buy. So let's do this. Well, I don't know the ATRs. I don't have ATR on it right now. But does this meet all the criteria? You have price expanding, price compressing, and then moving higher. Yes. Now, would it have worked past that 2 days? No. But that doesn't mean that it wasn't a valid entry. Okay? Let's take price off. Where else do we see it? This doesn't really turn down, so I'm not going to count that. But this, something around here, certainly would have counted. So let's see on price, on the replay. It does not have that uptick. It has turned, but has not had that proper uptick. And that's your uptick right there. And let's take the EMAs off. Okay. Do you have a momentum leg? Yes. Do you have 3 to 7 days of a consolidation? Absolutely. It's clearly consolidating. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So you have 10, 11, 12 days of a consolidation. And then it takes price out, right? So you could use that as your breakout level. Fantastic entry. Let's put the EMAs back on. Where else do we have it? Is this an entry? The answer is no, because it has an upward bias. It has not really compressed. Okay? Is it compressing here? It's starting to compress. Okay? But it is not really have compressed. Now, if this ticks up tomorrow and it takes out 1, 2, 3, 4, 5, 6, 7 days, then I think that probably would count. Now, do I like it better when all three moving averages are compressed? Yes, I do like that much better than something like this or like this, where you still have some air in between the 9 and that 21-day moving average. I'd like it to be compressed. Okay? There's a big difference between that. Look at AST. You should now see, this will be a third example, without even thinking twice. What do we have here? Beautiful, right? 1, 2, 3, 4, 5, 6, 7, right? So your 7th day closes right here. It closes above that. Momentum. Consolidation. It continues the momentum. If you're buying on this day, you're 3 days late. If you're buying on this day because you're waiting for that all-time high entry, you are 1, 2, 3, 4, 5 days late. Okay, you want to do it on that very first day that you have that uptick. You have the compression, all three moving averages nice and tight, and then you get that compression. Sorry, you have that expansion from compression. We'll do one more example, but I think it's very clear by now what it is that I look for when I'm looking for that compression and then that expansion through. This right here is your entry. You take price off. You have that momentum, that compression, and then that 4 EMA ticks up, starting to separate, right? So you see these three moving averages are now 1, 2. They're expanding away from each other. You see that they're expanding away from each other? They were compressed, then they open back up, and that's the start of the new trend, is when the moving averages are starting to expand again. But we don't need the moving averages. We can do this based on price. You have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So now you have your 10-day consolidation here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So here's your 10-day consolidation, right? This should be on your watch list because this is a momentum leg, a pullback, some tight price action here, 3 to 10 days, and then you have that move out of that consolidation. So whether you're doing strictly on price or you are using a moving average like the 4, 9, and 21-day moving average, it all works out the same. Now when price looks like this, we don't even need the moving averages. When it's up and down, let's just look for fun what the moving averages look like. This is just complete chaos and volatility, and this is not what we're looking for. We want nice and orderly action, okay? So that's what we look for. We want to look for stocks that are in a nice trend. We want to see that 4 EMA compress against that 9 EMA. We want to see that 21-day moving average either getting compressed or fully compressed like this is a much better. This, I'm trading much bigger than if I'm trading right here. But you want to see that first day that the 4 EMA ticks up and starts to create that air in between it and the 21-day moving average. You see, it's so subtle, but they're separating. They're separating. When you look at here, these 3 moving averages, they're separating. They get tight, and then one goes this way, one goes this way, and the other goes that way. That's your entry right there. Okay? Okay. So I hope you learned something. If you have any questions, let me know. I hope this was helpful. A lot of people ask, when is the entry? The entry is as soon as the new uptrend has confirmed on that day, on the day. Okay? A lot of these will happen at the end of the day. And as long as they are meeting the ATR rules, the price is not extended. Okay? You have 3 moving averages, right? You have 3 areas to focus on. If it's quote unquote extended on the day, like on today's time frame. So price versus low of day. Okay. If that is a little bit too extended for you, in your opinion, based on your system, that's fine. However, if price versus the 21 and 50 moving averages, if those moving averages are nice and tight, then the move, right, that consolidation is still tight, which means that you can get a low risk entry on that. Extended from the low, but tight versus that 21 and 50 day moving average is still a low risk entry. Okay? Do back testing, run this scenario, pay attention to it. Let me know if you have any questions. This is very basic, to the core, the principle of just price and getting low risk entries in a momentum system. So thanks a lot. Let me know if you have any questions.